Welcome. I thought perhaps today we'd take a look at the long US dollar Japanese yen trade. As you can see, the sentiment on the IG platform as at around about 9:20 on Tuesday morning. Of course, we've got the US markets out today for the July 4th holiday, so volumes are a little bit thin. But we're at 58% long, which means that 58% clients with a position on dollar yen are at the moment long on this trade. Let's take a look at the long trade on dollar yen. First, I want to go for the weekly chart to show where we are. Here we've got the MACD at the bottom and overlaid a Bollinger Band here. Now, so long as we're trading inside the Bollinger Band, the trade looks quite happy at these levels. The weekly has just this week appeared above this blue line, which is the 100-week moving average, which for a trade is significant. It now means that this will be the support level on the weekly chart. We've still got room in the Bollinger Band on the upper side to continue this rise. But if we look at the daily chart, it forms a little bit of a different picture. I've overlaid the Bollinger Band on here. I'll get rid of this in just a minute. But the Bollinger Band, we've got to trade just inside this. So we do have more potential upside to go for the dollar yen trade. I'll take the Bollinger off just to make it a little bit easier so we can see more of what's happening with this trade that we've got on this daily chart. Now, there's some interesting levels coming through here. We've got support line drawn here from the 18th of April, the low seen then, which was the 108.32 level. We've touched that a couple of times, so this is now a good trend line in terms of lower end support. And we've got some resistance, which is what we're touching at the moment. Yesterday, the dollar yen trade rose and touched this upside resistance, which started at the high point here on the 10th of March. We saw a touch on a couple of days on the round about the 10th of May. Yesterday touching that again. So this is now becoming some interesting resistance, and today you can see this hammer candle, the candle. We've got all the activity at the top here. We have tried to, the bears have tried to take this down, and they pulled out at the 200-day moving average, and the bulls have won back again. But the bulls are failing to take this above this upside resistance. Now, if we get upside trade above this and we get a daily close above this level, we then broken this line here, and the next level of resistance will then be this point here, which will be the 114.37. Breaking that, you're then up to the 115 level for the dollar yen. Now, if you do go long on this trade, you'll be wanting to put a stop just below this level of support down here at 111.78. Just below would coincide with these two moving averages down here, the 50 and the 100-day moving average. That would be about the point at which you put your stop if you do go long this trade. So you've got to break above where we are at the moment on this descending resistance line. You get a trade and a close above that. You can then see 114.37 as the profit to be taken for dollar yen. The one thing I would say onto this trade is that there is no meaningful Japanese economic data this week, and when the US markets come back in on Wednesday, we lead up to Thursday's release of the private payroll numbers out at 1:30 UK time. That could be a disturbing influence on the dollar yen trade this week, as indeed any dollar trade, and also of course Friday's non-farm payrolls, another potential influencing trade on any US dollar trade for this week.